All right, guys, welcome back to my channel once again. Today, this is CN on the screen. You're watching CN Great Councils and Forex Trade, and here is a video I promised. I talked about. I know there are lots of reactions. You guys wanting to have the details about this strategy. I'm not gonna be making just one video on this strategy, right? I'm gonna be making series of videos because this is one of my topmost strategies, killer strategies. I call it rocket flow strategy, right? So there are many secrets to be revealed about this strategy, and I tell you, you can use this strategy like it works all of the time, right? It's purely indicator based, and just two indicators are involved. So I'm here to give you the setting to the indicators and also give you the conditions, right? The very conditions you need to look out for before executing trades on the chart using this particular strategy. So without much ado, let's just get straight into the video. But before we do that, do good to give this video a thumbs up at the end of the day if you found value in it, and subscribe to my channel if you've not done so. Maybe you're a new viewer, kindly do so now. Share this video with other people, and don't forget to test out this video first and foremost on your demo and see how it works. But I can assure you that if you stick to the conditions I'm going to give you, you're going to be making huge money from this. Using this strategy. As you can see, I have trade running on this particular chart now with this strategy, right? Now, what you need to know is that this strategy works on any trading instrument, right? And it works on any time frame, but it's better on higher time frame from 15 minutes and above. So let me just give you the setting, and then we'll come back to the chart that will give you the conditions. So you're just gonna be clicking on this. Of course, in case you don't know, you are clicking on this place to get to the setting. So we need only these indicators on our main chart, right? So you don't have to look at the indicator windows. So on the main chart, we have moving average, and of course, my fractals is always there, but you don't need it this time, okay? What you need, of course, the fractal is always there. You need it all of the time, but what you need for this strategy now is the moving average and the Bollinger Band. So the moving average, I've said them already. You just have to look at the parameters and take a screenshot, or you pause the video to take proper record of it. So the moving average, this is what we have, okay? It's moving average, exponential moving average, okay? Now the period is 150. You can as well use 100. 200. You can use 200, but for better result, this is something I've been tested over the months. For a very long time, and it has proven to be the best. Okay, so these are just the parameters, right? Period 150, shift to zero, method, exponential. This is a secret strategy that ordinarily some people will decide to hoard, right? But because I want you guys to make money, just take a screenshot of it, and you can choose any color of your choice for the style, and you click done, right? Now we have the Bollinger Bands, okay? Please do not change the setting. The only thing you can change is the color of the style, okay? These are the parameters. Please, these are the parameters. Have you taken a screenshot of it? Now let's get back to the chart and let me show you. Now I'm going to be looking at basically two pairs to show you how this works for today's video. I'm not going to allow the video to be too long, right? But even if it's long, it's worth it, okay? Take your time, watch it over and over again, and always listen to whatever I say, okay? Follow it strictly, and you are going to see the result yourself, right? So what are you actually looking out for? Now, you all know about Bollinger Bands, and except for the newbies, right? Bollinger Band, moving average. I said I'll be making videos on how indicators work. Okay, indicators can offer you the best trading opportunities if only you know how and why, right? I mean, in the first place, those that say that indicators are crabs and all that, I mean, that they are bullshit. Okay, why do people go for EAs and robots and all those things? EAs are made from indicators. Trading robots are made from indicators. I mean, it couldn't have been foolishness to put indicators there. The only thing is that traders are lazy and they do not give out their time to watch the behavior of these indicators over time. I mean, it can be months, it can be years. You are studying a particular indicator, one or two, a couple of indicators to know their behavior, and then you know how to manipulate the parameters, watch them, study them, how do they behave and interact with price so that you take advantage of it. It's not foolishness to have put these indicators there. So what they manipulate, changing the parameters to come up with trading robots and of course EAs is just the indicators. Well, that's gonna be video for another day. We're gonna talk deeply into it, right? But for now, this is what we have here. Um, Rocket flow strategy on step index, and the time frame is 4 hours. Now, with this strategy, if you're trading with it on higher time frames like 1 hour, 4 hours, daily, I mean, if you are taking your signal from 4 hours or daily, then you should expect to spend days on your trading, right? I'm telling you, you should expect to spend days. Okay, if you're trading, taking your signal from 15 minutes, 30 minutes, 1 hour, you should be expecting to stay. If it's on 15 minutes, the least you can stay is 1 to 2 hours. Okay, if it's on 1 hour time frame, the least you can stay is uh, up to 4 to 6 hours. I'm telling you. So here's how it works. Okay, now I'm just gonna be giving you one of the key conditions, okay? Not secrets now. There are secrets that I'm gonna be releasing in other videos, okay? But one of the top condition is that number one, price. If you're looking for buying opportunities, price must have been on a bearish move in the previous sessions, right? Okay. Now just take a look at this place. Price has been on a bearish move from here, right? From here, the previous session. Okay, price has been on a bearish move from here. Now, whenever price has been on a bearish move, okay, what do you expect? Price will not go bearish forever. It must reverse, right? So there must be a change of character and of course change of direction, change of trend, right? So now when price has been on a bearish move, this can be on any time frame. I'm using 4 hours time frame as a yardstick, okay, as a case study this time because that's where we took this signal from, and I'm going to be showing you where we took it and why we took it, even though it was late, but because it is a reliable strategy. Now, this is the move downwards. So then price started reversing, okay. There was a change of character and all that. We're not talking about change of characters now, but we have indicators that is picking that for us. Now, you can see that this EM, okay, with the golden color, when price was bearish, okay, it went steep down as well. And then the Bollinger Band followed suit, went steep down. Okay, the Bollinger Band reacts to price quicker than the moving average. Okay, now this actually there were selling opportunities here, but I'm not talking about selling opportunity. Whatever I'm going to say for buying opportunity, the opposite would be the case for selling opportunities. Now, what happened? This came down, the Bollinger Bands and the moving average both came down, and then price moved up. Okay, made a touch on the moving average, came back, and eventually crossed the moving average. Price crossed the moving average here. Now, you notice that when price crossed the moving average, the three bands of the Bollinger Bands also crossed the moving average. Now, this is a serious sign of price reversing to the upside, making a bullish move. Now, I say that whenever price has made a bearish move, okay, in the previous session, it is a must that price will reverse, but that's going to be with time. So what we are looking at for is for that reversal. Once the reversal happens and price moves above the moving average with the Bollinger Bands moving, okay, now you are looking out for a cross whereby the three lines of the Bollinger Bands must cross above the moving average. When that happens, what you are looking out for as your entry is a pullback. That pullback must happen. It is a must that it is going to happen. Okay. Once there is a crossing of the three lines of the Bollinger Band, price, okay, above the moving average, there must be a pullback. Now, the pullback sometimes could be that price would pull back from the upper bands of the Bollinger Bands down to the middle line. That offers you a lower probability. Now, and it happens most often. But then the higher probability happens when price pulls back and then bounces off from the lower bands of the Bollinger Band. Remember, you are looking out for buying opportunity. In that case, your trade should be executed at the bounce off of price from the lower bands of the Bollinger Bands. Okay, now I'm going to show you now. Now, take a look at this place. This was where price, okay, price crossed this. Price crossed the moving average here, right? Price crossed the moving average here. And then the Bollinger Bands, all three of them crossed here. The lower band crossed here. Now, maybe I should pick my cross so that my arrow so that you get what I mean. Okay. Now, price itself crossed here. Price crossed here. Look at where I'm pointing. Then the upper bands of the upper line of the Bollinger Band crossed here as well, while the middle line crossed here. And then finally, the lower line crossed here. Okay. Now, the three crossed here now, and then price continued to move. Okay. And then met a resistance here, and before it started pulling back. It pulled back and then crossed the middle line, got to this point, and then he finally bounced off at the lower band of the Bollinger Band. This is the pullback you are looking out for. This is the pullback you are looking out for according to this time frame now. Okay. Remember, price crossed here. The three lines of the Bollinger Band crossed here. Now, if the three line does not cross the moving average, okay, then you are not looking out for opportunity. Even if the opportunity offers itself, you are not taking it. The three lines of the Bollinger Bands must cross the moving average above if you are looking out for buying opportunities. And then if that happens, you are expecting a pullback, which must happen. I said it must happen. Okay, it's just with time. It must happen depending on the time frame. Higher time frame takes longer to give you such opportunity, but then this happens on. You can check all the pairs. You must have, tons of it per day, depending on your trading style. If it's on lower time frame, higher time frame, you are going to have tons of it. So this is the pullback you are expecting. So it actually pulled back and then bounced off here. When are you supposed to execute your trade? At the bounce off of the point, okay? At this point, this is where you are taking your trade, and then your stop loss is going to be below, because at this point where it bounced off, okay, the moving average was already here. So your stop loss is going to be below the moving average, okay? That is if the moving average is very close to this point of bounce off. But if the moving average is not very close, you are looking at your left, and then you're going to set your stop loss below the recent swing low, which is here, the recent swing low. So your stop loss in the first scenario would have been here, would have been just below this, okay? But in the second scenario, if the moving average is not very close, you are looking out for the recent swing low, okay? Now this is the recent swing low to your left, okay? And then you put it here if the moving average is not close to the point of bounce off after the pullback, right? But in this case now, the moving average, look at it here, is just below the point of bounce off after the pullback. That's why in this scenario your stop loss, okay, was supposed to be here, right? Now this is 4 hours time frame. You can see if I actually made the trade late, okay, but then as price pulled back and gave this entry, okay, now is with assurance that price is going to keep moving up. So I missed this opportunity, but I knew that it's going to give another opportunity here. So I actually went to a lower time frame, and then I spotted this and I was able to take it, right? Now price is still going to be where I made this place my target, okay? That's why I decided to put a trailing stop loss, right? So I can actually close the trade any moment from now. But even if I don't want to have a trailing stop loss already, so that is just the condition. Now if you've not gotten, this video is long already, please, you can watch the video over and over again, and then get to know the details more and more. So before I say goodbye for today, I just want to check another pair so that you see how it was. Let's check boom 1000 to explain more. Right now, this you can as well use this to catch spikes, okay? If you are trading boom and crash, you can use it to sell or buy any trading instrument at all, be it currency pairs, be it stocks, whatsoever. It works on any trading instrument, be it volatility, step index. Now this is opportunity to buy right on boom 1000, and we're going to be looking at a 1 hour time frame, okay? I spotted the opportunity there. Now I explained something earlier. Now this is another scenario, right? Look at price. There's a crossing here, just as I explained earlier, okay? There's a crossing. This is where all moving average crossed, right? I mean, all lines of the Bollinger Band crossed here. Okay, just take a look at it. Okay, this was the point where all crossed, right? And then price pulled back from this, okay, and then it bounced off at the middle line of the Bollinger Band, Okay, this is where you're supposed to execute your trade, and then your stop loss will be somewhere here. Look at how that's for buying opportunity. That is to trade spike, those that trade spike, right? Now, remember that it was after this crossing that price never really came down. Price continued to move and never came back to cross the exponential moving average downwards, okay? It never came back. Look at it. It never came back. It never came back to cross it. It never came back. Look at it up to this point. Now, on lower time frame, you could actually spot several of these opportunities per day. Like I said, I'm going to be making more videos on this. There are other secrets I need to reveal, but this video is too long already, so I'm just gonna cut it here. But then you can watch the video again, look at those conditions while I make another video to give you more details and secrets about this strategy that you need to know. So many thanks for watching this video to this point. I'm very sorry the video is long already, but it's worth it. Okay, it's worth it because you're gonna be making the market when I release this video and more secrets on it. So do good to subscribe to this channel, give it a thumbs up, like if you have liked this, if you found value in this video, and also share with your friends and ask your questions in the comment section below, and I'll be there to reply. I'll be there to attend to you, and let's make this money together. Bye guys.